Hey everybody, a very happy Thursday, August 18 to you. Um, I want to start with, I'm just going to play the audio of one of my favorite Star Trek quotes. I'm a big Star Trek guy, the original one, of course. And I just want to play a snippet from their court martial episode from the original series. So Spock is being questioned by an attorney about supposedly a fatal mistake Kirk had made on the bridge.
Then how can you dispute the finding of the law?
I do not dispute it. I merely state that it is wrong.
Oh. On what do you base that statement?
I know the captain. He is
Please instruct the witness not to speculate.
Lieutenant, I am half Vulcanian. Vulcanians do not speculate. I speak from pure logic. If I let go of a hammer on a planet that has a positive gravity, I need not see it fall to know that it has, in fact, fallen.
I do not.
Okay, so I'll interrupt you right there. I have always been a big admirer of Spock. There's a lot of Spock in me, except for the ears. I'm a logical sort, a rational sort that can be deadly in the market sometimes. But the fact is that the market is, as I have said over and over again, tipped its hand, and there are really only two possibilities before us. One, the market goes down, which is good, or two, the market goes up, which will create just better shorting opportunities because it'll just go down later. Just like a hammer is going to fall whether you look at it or not, I have no doubt in my mind that given the everything laid out before us, that the markets are basically screwed. Now, how you time that will make a difference in your P&L, of course. If I had to place a trade now and I couldn't get out of it until the end of next year, I would just short the S&P. But there'll probably be some bounces along the way. Topic 2, Elliot wave. Now, Elliot wave is something that I was very enamored with for a while and fell out of love with for a while. I don't consider myself an accomplished Elliotician or even a diminutive of accomplished, whatever you want to term you want to use. I am an interested observer. As disenchanted as I've been over the past year or so, I've really never stopped reading them. And my own personal conclusion, my own feeling, it's nothing more than a feeling, is that it strikes me as useful and insightful and oftentimes correct in down markets. And for me, has been not useful at all in the up markets. And that probably is a lot to do with the nature of bear markets anyway, because bear markets, it tends to be a little more clear what's going to happen once things have tipped down. You can kind of see where support and resistance are, and it's easier to predict, I think. When you're just dealing with a blank white sheet of paper and there's no limit to how high something could go, like gold, for example, it's a lot harder. So I've been looking at them more and more, and I'm sort of don't be surprised to start seeing ads popping up on the site again, because in this kind of market, I'm kind of comfortable with this sort of service. The graph in front of you right now is something that they did a couple of days ago, which I think it strikes me as correct. I do think that we are in the midst of this wave 5 kind of fall. This was actually done before today, a couple of days ago, but we're in the midst of this wave 5 kind of fall, and I'm looking to cover my own shorts as we approach the 1,000-ish area, and then our buddy Shalom will do his dirty work, and only the Lord knows what he's going to pull in Jackson Hole, but he'll do his final assault on the United States, what's left of it, and we'll go into wave 2 and shoot up to 1250 or 1300, and that is when we, the Bears, will take over Earth. That'll be fun. Along those lines, going back to a graph I've shared a number of times, the Gold Bugs Index, the preceding graph very much agrees with the notion that I've laid out multiple times here, which is that we are kind of having our Bear Stearns moment right now. That is the prequel to the big fall ahead. So it all makes sense now. It's all lining up rather nicely. Let's look at a few index charts. Comp Q. This one, lovely top here, right triangle that was broken and recovered and then has been falling hard. I want to make a comment about the market in general using this as a launching point. The market gave me something which it rarely gives any trader, which is a second chance. I was short during this fall, be more precise, during that fall a couple of weeks ago, and but I wasn't short enough. I was often like 30, 35%, 40% committed, a lot of money in cash. And so it was nice to see the market fall, but it's not that nice when 2/3 of your money is just sitting around in cash doing nothing. It's kind of a bittersweet thing to be a bear and only be partaking partially from the chalice. Over the past number of days, and I've made no secret of this, been very loud about it, I've been adding shorts and adding shorts and adding shorts, and it's not that comfortable to be adding shorts when the market's going up, but I had a quiet calm about it because I just felt that hammer is going to drop. And it was really heartening today to wake up and be over 80% committed to 99 different short positions, and to have the market just completely fall out of bed. That was, and when the economic report came out at 7 a.m. my time, showing the economy isn't just bad but horrible, then it really got good. So it was, again, the market gave me a second chance to get back in, and today, definitely the best day in a couple of years, maybe even the best day of my entire life. I can't remember back more than a couple of years ago, so it's maybe the best day ever. I'm just going to say it is, because I really do. It's hard to imagine a day more profitable than this one. But the second chance, thank you, Mr. Market. I think the biggest second chance of all for everyone is going to be at that, and forgive the Elliot wave lingo here, but I'm using this as a shorthand. If we do get that wave 2 back up to 1300, I think that's going to be the biggest second chance of all time. And I'm not going to be 80% short. I'm going to be 200% short. I mean, I may even use options for the first time in a long time. So I'm going to pull out all the stops, because once that lovely man Bernanke, whom I will despise for the rest of my days, gets his Jackson Hole BS out of the way and does whatever he's going to do to this poor country, once that lift is out of the way, then all bets are off. We will own the world. We are going to take over, and everything is going to fall, and Bernanke will be powerless at that point to stop us anymore. We are going to ravage him. Count on it. So, tell us how you really feel. Dow Jones Industrial Average down 420 points approximately. There's nothing holding this up. Nothing. As I said regarding the wave 2 notion, whatever is going to push it maybe to 12,000 or so, perhaps. That would be a godsend. But there's nothing holding this up. There's nothing holding this up. This will be at 5,000 something within the next 2 to 3 years. We've got another 50% to go on this. Dollar NDX. We kind of saw this earlier with the Comp Q. Very pretty pattern. We are threatening this profoundly important support line right here. If we break that hard tomorrow, maybe there won't be a wave 2. Maybe we're in wave 3 already. Russell 2000. Technically fascinating pattern here going on. We've already broken beneath this support, and maybe some support here down in the 600 to 625 area, that kind of range. This is the kind of thing that I think may await us before the year's out. I don't think we're going to get it right now, but and for the record, I'm 75% committed right now, so still pretty heavy, but as so often the case, no large positions. Transports, Dow Transportation, very negative day for this index, down 6%. And I bring this one up. I don't often show this, but notice these fan lines. this, going back to just how far we may have to fall here, we're going to scooch this into the future. And amazingly, some people wonder what charting program is. Profit Charts. I created this, so that's the charting product I use. And so this I can see going beneath 3,000 in the next couple of years. So here again, a very substantial drop still coming. Financials, brokerages, weaker than most items. Very, very little in the way of support. Let me scooch this graph back to its more normal size here. Pardon me, because I just, yeah. Anyway, nothing holding this up, really. We've got broken support right here. The most pathetic retracement from that big tumble. Because interestingly, this started falling not a week or two ago. This started falling in February. I mean, that's how bad this one's been. A couple of other things and a couple of other anecdotes. Gold, the Kookmeister, absolutely parabolic here. I wasn't short gold or GDX this morning. I did a few GDX trades today. I think when it was all the dust was settled, I probably just paid some commissions. Didn't make much. I made a little bit of profit maybe. Gold and treasuries, both the flight to safety trades. Just to show how bad it's gotten, even I was thinking of going down to my local gold dealer to buy some gold, which is probably, I mean, if there's a Leicester-ish symbol for you to follow for contrarian signals, that's probably it. I mean, this is probably the top if I'm picking up the phone. But I called the two local dealers. One doesn't even bother answering, and the other said they've got some things in stock, but basically things are flying off the shelf. This used to be a very sleepy. It's literally in this little town and country shopping mall next to a shoe store and a rock store. But this is just hopping right now. So that's interesting little sign that they're being flooded with demand. People are just snapping, and it's cash only. People come in there with wads of cash and buying stuff. So I'll pass. This is a very interesting chart, but I don't know, a little overbought maybe? Could be. Wrap up with a couple of indicators here. The VIX, when the VIX was up here back on the 8th and started to sink, I guess a lot of folks were thinking that it would ease back down into the land of 20 again, as everybody got like chillaxed after the whole S&P thing. Well, that didn't last long, did it? In fact, this is just about as high as it's been for the past couple of years, and I don't know what tomorrow holds, obviously, but if people get freaked out that, oh my God, there's a weekend ahead, who knows, this can get 55, 60, I don't know, if people really start to panic. But interesting that this thing was up a full 35% today. So anybody long puts today did terrific. Unless those puts were on TLT, haha. And then TNX, speaking of interest rates have been falling since June 2007. And as I've pointed out, they've never been this low in any data I've got. It's not that big a data point, but there's a pretty impressive hammer right there. I don't know if this is going to signal a turnaround. If bonds did tumble tomorrow, I wouldn't just drop dead of shock because, my God, I mean, these things are... there was a time it'd be like an internet stock. Internet stocks probably aren't a great thing to point out as like a successful hot company right now. I mean, internet stocks are basically a complete joke. But there's always Facebook, right? That'll turn everything around. And where's Groupon? I just read they were almost out of cash. That's interesting. When's Groupon going to come public? Boy. Anyway, I'm rambling. So you've got a lot here. You've got Star Trek, you've got charts, you've got Elliot wave stuff, you've got ads to click, and you've got my good wishes. And so tomorrow we may recover, in quotes, from this drop today. I don't care that much. Let's just keep watching. If tomorrow tumbles hard, it may be the start of something bigger. I'm not sure. But I thank you, President Obama. You've done a lot for our spares, but you can do more. Good night.